Hello, everyone. My name is Igor Tomic, and I'm CEO at Dash Devs. And you're viewing the episode of the Fintech Garden. It's quite special episode for me. I actually a big fan, and we as a company utilizing a lot banking rails. And today we're talking with Ezequiel Canestrari, who is Chief Operating Officer at ClearBank Europe. And that's a fascinating topic from both sides because we are excited to have the conversation with ClearBank, but there are a lot of going on with the banking rails in the European Union. So hello, Ezequiel. How are you today?
Hi, Igor. Thank you so much for having me here.
It's a pleasure for us. And I think that's one of the episodes which is kind of giving a lot of food for thoughts because we are going to discuss some questions that I have personally and they circulate into the market. Let's jump with a practical one. ClearBank is basically, or the banking as a service is usually the vendor who is facilitating to provide the banking functionality to the fintechs or even the banks. There are a lot of discussions how it should be properly done. Usually on markets with the specific licenses, you are able to integrate with the local payment rails, banking rails, and execute it yourself. But there are vendors like ClearBank and others who are providing this BaaS functionality. And the usual question that I'm asking myself and our clients and people who do the integration with the BaaS, like what is the trade-off and what is the difference speed versus trust? Because is it really important right now how you're doing the banking rails and you're integrating the really cornerstone of your financial services, like opening the banking account, facilitating the local payments? Is it really a thing that you need to choose from?
I think there's two elements of that. On the embedded banking side, when we look at it as a proposition, it's a partnership at the end of the day. And both parties need to be working together very closely. And you need to be able to rely on one another. And that's where the infrastructure comes into play. You need to be able to have, as a provider for the payment rails, but also the accounts, a certain level of resilience, a certain level of speed to keep up not only with regulations but also with the demand and the scale that your products are going to bring. When you are B2B, you're very much subject to what your customer brings, what their customer reacts. So working very close with your partner, it's really important because you understand where the peaks are going to be, how much are they going to grow, and how can you build together a product. Yes, there are certain regulations that affect at different stages, but that's also why it's very good or very important to be able to focus on what are the regimes that rule those certain activities and working very closely with regulators to say this is what we are expecting to do, this is our partner, this is how we are overlooking and overseeing what they're doing, this is our forecast, and these are our controls. So that way, from the regulator to the very end customer, everything is clear and you can manage that relationship and predict what's going to come.
Totally makes sense. And maybe that's the first outcome that I would like to acknowledge to our listeners and viewers, because when you think about BaaS, usually people are tending to think about as a technical integrator, but it's way, way more than just an ability to use APIs. It's a framework from regulator, which is negotiated hard, overviewed by the banking as a service platform, because you're not just having the tech to open an account. You're not just having the account receiving the money. You are basically integrated into the regulator framework, which is built between regulator and these vendors. They have certain accountability on you as a business by providing you an ability to open account, to initiate and receive the payment. So it's usually some misoversight from fintechs. That's maybe another question, because right now, like if we will ask on the market, what is the difference between traditional banks and the fintechs, it's usually the speed on the market. Like tier one bank just thought and planned the quarterly meeting to discuss the plans, but the fintech might already did the overnight builds and deployed something in production. Is it still the case when we're talking about the banking infrastructure? Is it still giving an advantage to the fintechs with the BaaS, or like what is the play here in your view between fintechs who are using the BaaS and then the banks? Are they moving faster? Is it still competitive advantage with the speed?
I think speed is still very much relevant, but we are past that peak where it was all about speed. It was all about go to market. Today, in the world of real time payments, in the world of DORA and stable coins and digital assets in general, it's less about the speed. That is more about can you be supporting your customer with a level of service that no one else can? Can you help your customer grow and build their products? It doesn't matter if I today go to the market with a new product, but then the backend doesn't work, or actually you want to put more customers through and I tell you I can't, or every couple of weeks I have an incident or I have to have downtime to have an update. It doesn't matter how quickly I went to the market because the customer now is savvy and knows what's out there and can pick. So if you're not providing the service that they expect, it doesn't matter that you were the first one. They will go and switch to the next provider. Could be a bit slower, but they will give them the trust and the performance that they're looking for.
Actually, it's quite interesting because on the merchant payment ecosystem in Berlin, we discussed like on the dinner with the different merchants how they select in the vendors, and that's popped up in the discussion. Like usually, the large scale organizations who are doing the payments or even the banking rails, they look in the partner who is stable and rather adding up into the partnership rather than eating resources with the issues, downtimes, some problems which they are not keeping to as a promise to implement and execute, which is overlapping a lot. And I think that kind of shows that current market is past the formation stage because during the formation, it seems that the speed is important. It doesn't matter what you do. It means how fast you roll in hour to the clients, how the first impression you're going to be, because that's the first thing that customer will know as a product and as a business. But it seems that right now the market is kind of stabilized. Everyone have a specific niche. There is no need to rush and have the first impression because in the end of the day, what you're going to compete with is the quality of the product and the value for the end customer, which is really resonating what we do as a dash devs, but it seems to be the market like a state right now. And in terms of the challenges, like what you see in this environment, because okay, there is no value add in rushing and deploying something in 2 weeks. But what are the values from your perspective that you see from helping to various fintechs and banks? Like, what is the value right now? What you would suggest to focus on that?
The communication with the customer is key. That's
Okay.
one of the key things, especially in this new era of B2Bs. You need to be very close to them. You need to understand their flows. You need to understand their needs. That's very important. The other important thing that critical for new organizations to focus on is the operational readiness. And that's much more than just building an API. Having an API 2, 3 years ago, that was a differentiator. Now that's not anymore. Now, how do you do reconciliations? Is your operational team ready to process the payments? Are you fully compliant with rules and regulations rather than having a last minute request for your customers to update something? And people also think, oh, operational readiness is just the operations team. No, it's the full organization. Is the full organization ready to take on additional challenges? And in many cases, that's an element that is overseen and needs to be focused. I do think, going back to your point about speed, one of the biggest mistakes I've seen companies do is think that they can fix things later, and they rush, they cut corners, they skip a few steps, and that comes back and bites you. Being able to launch your product well, put the guardrails in place, put your foundations in place, it's critical.
It's kind of give a good balance between what is the strategy points and what are the tactical points. So sometimes you can compromise something on tactical level, but never compromise the strategic approach, like properly building the processes. And maybe in this case, you have some examples like what usually might be cut as a strategic, like maybe you have some examples to go more into details and explaining what actually it means from operational resilience.
I think a good example is all of the new regulations that have been introduced in the past couple of years, right? From DORA to SEPA Instant regulation. Now, SEPA Instant regulation is a good example. Being compliant, I don't want to say it's not that difficult, but at the end of the day, everyone will be compliant.
Yeah.
Now, the question is how do you, at what level you're compliant. If you're bolting in the requirements from SEPA Instant into a very old archaic platform just for the sake of complying with regulation, then that's a strategic issue. As soon as you start putting volume through, as soon as the new wave of changes on SEPA Indirect, or as long as you need a customer comes and says, I want to do something new with SEPA Instant, I want this product, you're tight, you're going to lose business, and you're going to be off that race. Looking at regulations and thinking, where can you put the effort? Now, If you have a portal, let's say, and there's a small element of the portal that it's not perfectly designed and it's not perfectly working, depending on the situation, you can take a tactical solution. But when it's something as critical as being able to process SEPA instant payment within the 2 seconds, because it's a 10, but we all know that in order to meet that, you need to process payments within 2 seconds or less, 24/7, 365. You can't just say, well, I'll cut corners here. You need a proper platform. And that's why, from our side, we spend a lot of time trying to get ahead of regulations and try to incorporate it as early as possible into our design. So for us, regulation is part of the core of designing our platform.
It makes sense. And it sounds like similar processes are happening in technical engineering because there is this distinguishing like a technical depth and architecture mismatches. Because maybe with examples of body, like if you cut the hand, it's that thing you cannot reverse it. And certain things like if you, I don't know, you didn't cut your nails, maybe you will do the next day. It's critical, it's good to do that, but it's not doing the heavy effect on the whole process and whole body. So in this case, my maybe the second takeout that I would like to suggest for all listeners is to do the proper assessment and understanding what you are compromising when you are not doing something. Because changing the look and feel for the portal is one thing, but not adding the specific processes to kind of speed up the processes of the payment is not good, because if you're missing the steps of the compliance or proper checks to speed up and your architecture is not good, you're kind of covering issues instead of like a properly re-architecturing and doing the technical depth. I am really with you with that, and I think it's important aspect, because then you will not have time to properly to do the architecture, because the more layers of the compromises you do, the harder it is to go back and fix the things that are already there. So that's a really good one example. Thank you for doing that. To explain to our listeners, I would say usually I personally take a look on the BaaS integration as two modes. One, you have own license, you have own regulatory approval process for onboarding clients, and then you kind of utilizing the BaaS vendor to kind of open accounts. It doesn't matter virtual one or real one, and facilitate the payments. But I know the cases, and in my understanding, and that's what I would like Ezequiel you to confirm or kind of explain a better way. With embedded banking, there are a lot of like understanding definitions what is embedded. Like last year, I was going to conferences and I was asking everyone like, what do you understand by embedded banking? And I've built the understanding that embedded banking, when you're kind of partnering with the institution which has the license, and you're working more as a front face for your business model, but the whole heavy lifting with the licensing, with the compliance, with the regulatory check and the tech is done by your embedded banking partner. A good example here might be the e-commerce. So as a merchant, I would like to sell, I don't know, let's say consumers electronics. But I understand that my market has a need for buy now, pay later product. So instead of going it for the license, having the license for buy now, pay later, building the business process, I'm partnering with the institution which is provided buy now, pay later, and then I'm embedding them into my checkout process. So I'm still merchant, I'm still running the e-commerce, still selling the consumer electronics, but the heavy lifting for buy now, pay later seamlessly in my business process is done by other partner who is leveraging the license, who is having a good understanding with this license. So it's basically two different accountabilities about who is reporting to the regulator and who is doing the best to kind of simplify the process. Because when I'm having my own license, I'm accountable for the business process, for the tech. With embedded banking or embedded fintech process, I'm kind of integrating, but the heavy lifting is done by the partner. Is it correct assumption?
You've done an excellent explanation of what embedded banking is, and I think there's a lot of people with different understanding what embedded banking is. And for us at ClearBank, in order to be offering embedded banking, you need to be a bank. That's a key part of embedded banking, and it's in the name. The way we see it is ClearBank outsource certain activities, especially front-end activities, to our partners, to our
Yeah.
customers. So they can actually do and focus on what they do best. In the UK, we have a number of examples of embedded banking. One being, probably our closest one, being Tide. Although Tide for us was our first one. We won a grant from BCR back in 2020, I think it was, and we started building embedded banking then with them. And in that case, what we did is we offered them the bank account and the payment rails. And when you open today in the UK an account with Tide, you sign the terms and conditions with Tide, but also with ClearBank. You as a customer and Tide actually as a customer of ClearBank doesn't need to worry about accounts and the payments. That's done and that's running smoothly in the background by ClearBank. Now, what can then Tide do? Focus on what they do best: service small and medium enterprises, adding additional products as part of their offering, billing, legal advice, tax advice, invoicing, and reconciliation. There's so much that they can do. And that's the value of the proposition that our customer, the partner in the embedded banking ecosystem, looks after what they do best and leave to the bank what the bank does best. To your point, the heavy lifting, in a way, is done by the bank. And the scrutiny from the regulator falls on the bank. The ultimate accountability falls with the bank. But this is where, as I mentioned at the very beginning, it's so important to have a transparent and honest communication channel with your partners because you are relying on them to do a number of things. They need to also understand why, if a payment is held, why that's important. If we're doing an investigation on an account, why that's important. And that's why, again, that if you offer services, that you do it in a resilient and reliable way, that your partner can trust you, that you're going to be having an uptime of 5 nines. Imagine the customer, your partner, facing the end customer and having to explain that you had an issue, an outage. Far from ideal because the customer experience, it's one layer removed. So you need to ensure that that chain, that regulator, embedded banking provider, partner, and end customer, that works as seamless as it can. If that is broken down somewhere, then the banking model falls apart.
Well said. And I'm really big fan of the game theory. And I think here it's really good example of non-zero sum game because we tend to think a lot in our daily interaction that if I have $1 and I'm giving to you, you kind of have plus $1 and I have minus one. And it's a great example when the game is not zero summed because the moment when you partner with a correct vendor for the banking rails or especially with embedded banking, it's not like you paying and they get in $1 and you're losing one. It might be the situation when you're getting plus one because you're using the correct partner and the correct ecosystem and infrastructure, and the partner is then working well because they see what is happening on the customer side. So it becomes beneficial for both sides, and which is more importantly beneficial for the customers who are utilizing this ecosystem because the Tide can focus on the business and attrition of the customers, retaining them, making sure that they're happy with the proper customer support, with the proper business functionality. And then a ClearBank or companies like that can actually focus on providing the best in class, more resilient infrastructure for embedded banking by having the license, by having the proper technical infrastructure. And it's good. It's something I've been hearing in the United Kingdom for almost a decade. Like a lot of people in 2014, 15, when all the digital banks started to pop up, they started to discuss ecosystem. And that's a really great example of ecosystem because it's actually bringing together the classical tier one banking license and infrastructure and focus on the customer. So congratulations. It's a really good example. And I think it's inspiring one, not just in terms of the banking as a service or embedded banking. It's inspiring that we have this ability to integrate and work with the vendors as a partners rather than rivals, even though the companies might have a little bit competitive licenses, even in this case.
Oh, 100%. And we've been working with, well, some of our partners, yeah, to your point, there's a bit of an overlap. And we try to, it's all about working together and finding how we can work each other. And I think that's one of the things I absolutely love about the fintech world, where, to your point, it's less about a zero sum game. It's more, how can we work together, figuring out ways to really revolutionize the market and the industry? What can we do differently? There's a typical question of, well, is regulation killing innovation? I think back in Simos, you and I spoke about it. I don't think that's necessarily the case, especially in Europe with some of the new regulations. Yes, regulation puts the guardrails, but it's all about how can you think differently and work together with your partners to come up with something new. It's easy to sit on the side and say, well, this regulation is not good. I don't like it. embedded banking didn't exist in 2020, and regulation probably didn't necessarily allow for that. And it was building into that, finding ways. And for us, that PCR grant, it took us years to figure out the right way to build embedded banking. And it was a lot of trial and error, and it was learning, and it was not taking cutting corners, not taking shortcuts. It was actually figuring out what do we need to do to provide ourselves with the comfort, but also the regulators on the comfort of what we're doing, how we are outsourcing it, what controls we have, what's the governance we have. Today we have 7, 8 customers in the UK, and it's continued to grow. It's one of the best products that we have, because the demand and the pipeline that we have for embedded banking continues to grow, because people are seeing the results, they're seeing the benefit of it. Because it's not, oh, just get access to the payments rails, you're getting much more than that. And that is much more valuable than just thinking of ClearBank as a payment rail.
There is a bright future for embedded banking and embedded finance functionality, because it kind of gives the door for other businesses who has a lot of needs in terms of the technical infrastructure for payments, accounts, or even cards, like a different services from the financial world, but they don't have resources, knowledge, and time, which is importantly to build on themselves. So they usually partner up. And I think with the more upcoming years, it's going to be the bigger market, because there are a lot of things which are happening digitally right now compared to 10 years ago.
100%. And think about this in the world of digital assets and AI, right? Nowadays, you can create an institution, company, and you don't need all of the components. Today, you can build elements of it and partner with others. So a company that's just starting can build a completely innovative product and don't have to worry about, for example, in our case, the payment rates or the account structure, the safeguarding of those funds, or FSCS protection in the UK and DGS in Europe. You don't have to worry about that. You connect to that and you can focus on what you do best. And it goes back again, the speed to market is going to be faster because it's just a case of integrating with your partner, and then you focus on building your core product, your foundation, the best way possible.
Yeah, and that actually is really inspiring, because it opens the new possibilities. So instead of spending the time, resources, getting through the trial and error process and educating yourself, you can rely on the third parties, which already have those experiences. They already built the things which are worked, and you kind of benefiting from past experience and well-defined rails. I will use one quote from another episode with the Tony Fish. I was really happy to discuss with him some AI and also regulation moments, and he pointed really good analogy. Like when we're talking about the fintechs, people are underestimating how it's different from other industries. Because if you take, I don't know, social or entertainment, it's usually the roads and cars. Like every company is really autonomous. They can drive left, right, do whatever they want. But the fintech industry is the railroads. Like everyone is super focused to make sure that it's safe, it's getting in time in the correct place. There is regulatory frameworks and oversight, which is not giving an ability to build the cars which is driving left, right, and maybe some even putting some risks on the customers, because we have to properly pick up the customers, deliver them from point to A to B, and make sure that they're safe and sound and everything is running smoothly. We cannot fail, which is different from other industries, which is putting a lot of weight on the shoulders. And I think the discussions like that, they have a possibility to disclose how many things are happening on the background. When you think, I just onboarded, I did the screenshot, I don't know, I did the face ID, I did the document upload, and everything magically working on the ground. A lot of efforts from resources, thinking, executing, testing has been put into those processes. So we should really acknowledge this in our understanding of the fintechs.
But that's what makes it exciting, right? The possibility of differentiate yourself, it's not that obvious. To your point, you can't just turn to the right and pass a car. You have the rails there. So how can you make it better? How can you partner with someone to make it better? How can you provide that trust or generate that trust? Because that's at the end of the day the new commodity in the fintech world.
Oh, trusted is old. It's as old as oil, I would say, because whenever I jumped into the fintech in 2014, and the first thing that I kind of heard for the first one is trust for the product. Because if you work with the startups, like you're breaking things fast, like if you lose something, it's not good, but it's not vital for your business. But with the fintechs, it's definitely different. And coming back to the regulations, I think that's the last section for today for the podcast. I think there are a lot of things which are happening in European Union, and like ClearBank is operating as an intersection of the banks, fintechs, and regulators. So how do you balance the compliance and the need to innovate and grow? Because it's quite diverse to keep everything into the sync. So what is the magic secret for doing that?
I don't think we have a magic secret. I think we take compliance very seriously, and it's embedded in everything we do. And as I said before, compliance shouldn't be, and in our case, it's not a limitator. It doesn't stop us from doing what we want to do. I have an expression from back home, which basically translates: if you don't do things properly the first time, you have to do it twice. For me, it's something it resonates with me because when we do things, we want to do it properly. For example, the whole license application that we had in Europe, we built it from the ground up. We didn't want to just rush and get a license, even though we ended up being the fastest license application in Europe. We launched in March last year, and we went from zero payments to 1 million payments per month in literally less than 60 days. Not a single incident. And that doesn't happen by chance. That happens because we took the time to understand our obligations, understand our platform, understand our customers. So, yes, there's a lot of regulations, but if you take it seriously and you incorporate it into what you're doing, it's just a natural habit and you can still then grow from there. So, when the instant payment regulations were enforced in October last year, when we launched in March, we were already compliant. We didn't have to worry. We built those payment rails already thinking of what the new regulations will say. So embedding regulation, embedding the discussions with the regulator into your design, into your everyday discussions is critical.
That's true. And it really builds the foundation for the changes because, as you explained, sometimes if you dedicate the thinking process into acknowledging what is happening into the future, then you are prepared for this future. And that's the case with the no need to change when the new regulations came in force. And that's maybe it brings to the last question of the episode. Like right now, a lot of things are happening and they initiated in European Union, like the DORA framework, PSD3, MiCA, AI coming. So, what is it telling to you as an expert in fintech or in financial industries where the Europe is heading? Because I would say European Union is quite unique. We technically see United States, which is shifting a lot of the digital assets into crypto. United Kingdom is doing tremendous job with the facilitating the regulations and at the same time helping to innovate. And the European Union is kind of sitting in between, I would say. Certain things are definitely is better than in the United States, but sometimes European Union can learn a lot from United Kingdom.
I think they're trying to find a balance, and I can see what they're trying to achieve, right?
Yeah,
If you think about, let's say, instant payment regulations, PSD3 or MiCA,
yeah,
right? Those are very much, I would say, very innovative in a way because they're very provide a clarity, plain level field for everyone. If you, not all regulators have that mindset, and which means you cannot go and launch something on digital assets. While with MiCA, you might like it or not, but the rules of the game are very clear,
yeah, yeah.
and it's a regime you can then start building on.
Hmm.
Same with instant payments. What instant payment regulations does is it forces all providers to
Yeah,
comply with a set of regulations that actually are for the benefit of the end customer, and if anything, pushes for further innovation. For because they're gonna be with these new regulations as part of IPR, there's gonna be new products in the market, and we are already starting to see some of them. We're already talking with customers that want to really leverage instant payments. Now, on the other hand, you have the likes of DORA or the AI Act. And again, it's let's say the European regulations are more prescriptive than other regulations. But that again provides clarity. What DORA tries to do is provide a framework that goes back and gives reliance. So a lot of the conversations we had today are around resilience, reliability, uptime, availability, security. And we talked about embedded banking where you are dependent on another provider. what DORA does is actually provide a framework for all of that we are so keen in talking about. So again, it tells you what good looks like. So you're not having to have an argument every time you're going to partner with someone about, oh, you need this control or you don't need this control or this wording in a contract. This helps you find out what you need to do. So can we see more innovative regulations? Probably, but today I don't feel that the regulations that we have actually stopping us from growing. And if anything, we are seeing from a ClearBank point of view the benefits of these new regulations, the benefits of what this can mean to our customers in Europe and in the UK.
Thank you for sharing this positive note. Personally, I'm a big fan of DORA because it kind of structured the communication between companies and vendors. Because before that, you can even might, I don't know, keep your passwords printed near the computer in office. And DORA is saying, actually, guys, you need to do a little bit better in terms of managing the relationships, the security, because that's a benefit of the end customers. Because if something goes wrong, the least protected person is the customer because everything is digital. You cannot communicate, your infrastructure goes down, and you need to make sure that the customer having a proper visibility and they properly protected as a framework for your communication with the third parties and dealing with the security, with the business processes and resilience of the infrastructure. It's really positive oversight and overview from you. I think it aligns with my internal understanding. So we have plenty of space to innovate, but we always should keep in mind that there are customers who are we serving with the different services, and we need to make sure that they experience is really smooth and we have really good playbooks even if something goes wrong. I think that's an episode for today. It was really fruitful discussion, and thank you sharing your overview and your insights what is happening in the European Union with embedded banking, with the banking rails. It was really interesting for me personally, and I hope that it was insightful and interesting for our listeners and viewers. So thank you for staying with us till the end of the episode. Thank you, Ezequiel, for coming today to us.
Thanks so much, Igor. It was a pleasure to be here.